Hey everyone, welcome back to Corporate Decoder. Today we're diving into a report that might seem dry at first, but trust me, there's a juicy secret hiding inside, like finding a protein bar in a pile of paperwork. We're looking at BellRing Brands and their recent announcement about buying back their own stock. What does that mean for the company and for investors? Let's find out. First off, this is a Form 8K filing, which is basically a company shouting, "Hey, pay attention to this," to the Securities and Exchange Commission, the SEC, and by extension, to all of us. It's used for reporting significant events that could affect the company and its stock. Think of it as a corporate bat signal. This particular report is dated March 6, 2025. The big news here is that BellRing Brands, the company behind brands like Premier Protein, has approved a new plan to buy back its own shares, which is called a share repurchase program. This new authorization, good from March 6, 2025, is for a whopping $300 million. Now here's where it gets interesting. This new plan replaces an existing one, also for $300 million, that was approved almost exactly a year prior. So what happened to the old plan? Well, the company tells us they've already bought back around $288 million worth of shares under that previous plan, so they were almost done. Now they are canceling the old authorization and starting a new one for the same amount. The new authorization extends for a 2-year period. The company says they can buy back shares in a bunch of different ways. They can buy them on the open market, meaning just like any other investor buying shares. They can also do it privately or through more complicated transactions. It's like having different tools in your toolbox for fixing a car. They can use whatever tool is best for the job. It's important to note that this repurchase authorization doesn't force the company to buy back any specific number of shares. They can stop or pause the buybacks whenever they want. This is important because the company needs to consider things like how much cash they have on hand, what the stock price is, and what's happening in the overall market. Legal requirements can also play a role. Finally, the report includes an exhibit, which is basically an attachment. In this case, it's a press release announcing the share repurchase program. Companies usually do this to let investors know what's going on and why they think it's a good idea. So why is BellRing Brands buying back its own stock? What does it mean? Well, there are a few reasons why companies do this. First, it can be a way to return cash to shareholders. If the company thinks its stock is undervalued, meaning it's trading for less than it's really worth, buying back shares can be a good investment. It reduces the number of shares outstanding, which can increase earnings per share, EPS, which is a key metric many investors look at. It can also signal to the market that the company has confidence in its future prospects. Companies might also do this to offset the dilution, the lowering of value caused by issuing new shares, perhaps to employees as compensation. Think of it like thinning out soup that is too thick. Now, let's take a look at the financials. While this 8K doesn't include a full financial report, it's important to understand BellRing Brands' overall financial picture to put this share repurchase program into context. BellRing Brands is in the business of making and selling nutrition products with a focus on protein-based shakes, powders, and supplements. The protein shake market is competitive. So what does this all mean for BellRing Brands? Well, on the one hand, this share repurchase program suggests that the company is confident in its financial position and future prospects. They have enough cash to buy back shares, and they believe that doing so will benefit shareholders. It can also boost investor confidence in the company. It also means they are betting on themselves. However, there are also some potential risks to consider. First, the company could be using cash that could be better used for other things, like investing in new products or acquisitions. There is always an opportunity cost. Second, if the company buys back shares at too high a price, it could end up wasting money. It also puts all of your eggs in one basket, so to speak. Also, remember that the company can stop or pause the buybacks whenever they want. So, if the company's financial situation changes or if the market takes a turn for the worse, they could decide to scrap the program. Overall, I think this share repurchase program is a positive sign for BellRing Brands. It suggests that the company is well managed, financially strong, and confident in its future. However, investors should always do their own research and consider the potential risks before investing in any company. Thanks for watching Corporate Decoder. If you enjoyed this video, please hit that like button, leave a comment below, and subscribe to the channel for more deep dives into the world of corporate filings. Let me know which company you want me to decode next time.